You've followed the Regis and MWB stories, as you said. How important is the growth story?
The market loves growth. If you can deliver the returns, the market will give you arguably as much money as you want, or at least as much money as they think you can handle. Growth is very valuable. I mean, Regis has been growing at 20% compound in the number of workstations per annum for the last 2 to 3 years. That is huge. The market's not expecting that to continue at that rate. You can see that from the rating of the shares. If they do continue, that's going to give you an investor plenty of upside and the sector another fillip in the stock market.
And just looking at the modelling, do you think with the advent of very low, long-term low interest rates, we're going to see a little bit of a move away from the leasehold model of taking long leases and then granting short ones to perhaps freehold owning in order to cap the long-term outgoings?
It could make sense to do that, but of course it's a financially very different model. The whole beauty about serviced offices is that you get your tenants to pay for a large part of your costs. You might get your landlord to pay for a large part of your costs, and it can in fact be negative working capital and very cash generative up front once you fill the centre. So from that point of view, you don't need to move, you don't want to move to a freehold model.
Is there a material difference between the values that are apportioned to companies in the public sector as opposed to the private, or is it really much of a muchness?
Well, you're going to get a premium in the public sector. You should do. It just so happens, in fact, that I don't think the sector is valued as highly as it should be, but that doesn't mean to say it's still not a premium to off-market transactions. You know, it delivers cash flow. That's
is there a minimum size, do you think, that that premium would attach to? So, for example, would it, historically it might have been 50 to 80 million that one might have looked for in terms of turnover. Now, is it that much higher? Is it 100, 150 million, or is it still at any level?
It's not so much a revenue thing. It's not necessarily a profit thing either, although it's intimately connected. It's the liquidity of the shares in the public market. And investors are increasingly looking for liquidity. They can see that the market for very micro cap companies has shrunk, and they want to be able to exit as well as entry at reasonable prices, at reasonable spreads. Yeah. So that's really the issue. And the question then is, how large does a company need to be? If you think that a minimum free float should be, choose a number, but perhaps £20 million. Mm-hmm. If you think that they want to take a minimum stake of maybe £1 million, if they don't want to own more than 2%, 10% of a share capital, it goes on. You can work back up to how large a company needs to be by valuation.
The other area, of course, because the whole industry is income driven, is the advent of the co-working side of the business, with the likes of WeWork and other collaborative workspace environments. And there we're moving from a fixed desk rate on a per monthly basis to selling something that's more akin to a membership, where it's not applied to a particular desk, and for that reason it's possible to sell effectively that desk many times over in order to enhance the revenue. What are your views of the impact of this? Is it something that we're going to see progressively being entertained by most of the big operators?
I think the big operators are going to have to target this kind of community approach, partly, if only because they're flabbergasted by the valuation that's been attached to WeWork. The most recent valuation that I've seen is $15 billion for a business that has less than 60 active centres. That's not bad going per centre, but if they can generate extra values per square foot, and or if their marketing budget is effectively done for them by a community co-working approach, then of course you can make much better profitability on a given square foot or revenue base. But how far does that take you? It only takes you to a certain extent, in my view. I mean, obviously, forget the valuation, but I think that everybody is going to look at Regis, for example. By the end of this year, we'll have 50 WeWork type spaces from 18 a year ago. Yeah. It's a brand they bought 3 years ago. They'll take it further.
Do you think that there's going to be more in the way of mergers and consolidation within the sector? We've seen quite a lot over the last 5 years.
I think it's going to happen. I think people are on the hunt for value, obviously, and the sector offers growth and with some value, depending on the price you pay, of course. But I think it's a hot space. I don't think, unless the commercial world blows up, and it's true that rents in some pretty hot markets like London, New York, are near peak levels, but generally, we're not seeing vacancy statistics completely out of line in the States or in the UK. I think that there's going to be more and more transactions. It's a very interesting space, and I think the world of flexible working is only going to grow.
Andrew, thank you very much indeed for joining me today.
Thank you.
That's all we've got time for on this edition. Please do join me again. Bye-bye.